Hey, how's it going, everybody? It's your boy KIFS Crypto back in the house, and today I'm going to tell you a little story about how the market came to where it is at this point right now, when it's going to bottom out, what's going to be happening in the upcoming months, and generally the story of inflation starting from COVID times and ending perhaps a few months from now. Well, I guess we're going to have to wait and see. So stick around until the end if you want to find out some Bitcoin price predictions, where the best area to dollar cost average in your positions in Bitcoin are, and a few more other relevant pieces of information. Now, before we get into it, there's a very important thing that I need to teach you about, which is quantitative easing. If you guys have not heard of this term, it is basically a fancy term that means printing of money. And what has been happening since the beginning of COVID? Well, a lot of central banks around the world, such as the Fed, such as the European Central Bank, and the British Central Bank, they were all printing a large amount of money. And what happens when you print a lot of money? Well, it causes inflation, but that's a story for a little bit later in this video. The idea is that quantitative easing is purchasing of long-term securities from the open market to basically pump money into the economy to stimulate consumption, investment, and demand in general, which is good for economic growth, especially in times of low productivity such as COVID times brought to us. Factories shutting down, all of this stuff, not being able to work, yada yada, right? So it's a form of monetary policy, and it was a plan initially that the US Federal Reserve pumps in $700 billion at the start of COVID, which is now a lot more than that number. But that is just the beginning of the story. And before I continue, I just wanted to talk about a really cool platform very quickly. It's called margex, and if you want to reliably trade Bitcoin with up to 100 times leverage, you can do it very easily on this platform. You have a broad range of powerful tools to do pretty much anything you want to, harness your trading skills, and make some income for yourself. You can learn more through various tutorials, but there's no better way to learn than actually heading on into the margex platform yourself. Checking out the technicals. By the way, charts looking really crisp, really cool. You're very easily able to buy or sell on the market. You can buy with limit orders. You can buy with stop market orders as well if you want to catch a move before it starts happening, or while it is happening. Now you have your wallet as well, and generally if you go inside for the first time, you will realize that they are offering you a nice little tutorial that will teach you everything related to price manipulation protection as well. For example, there is brokers out there who are going to stop you out by a huge move or something like that happening, which is not good, right? Because this move only happens on certain brokers and on certain transactions, and it is very nice to see that margex has this type of protection so that you don't get stopped out for some huge wick that is not even there on the open market. So this is some good stuff. Also, deep liquidity and minimum slippage, meaning that you will get your positions executed exactly where you tend them to be executed at. And a little bit more, you can make a stop loss, you can set your take profit, you can do pretty much whatever you want in a very nice user interface and experience with a powerful trading engine that can process 100,000 trades per second. And it is very simple to start. All you need to do is press the fund your account button and you can trade crypto as much as you want. So really cool stuff right here. Make sure to check out margex.com if you want to learn more. It's going to be down in the description below. And let's move on with my COVID story. Now that you know what quantitative easing is, let's start at the beginning of COVID times. So what happened back here? Well, COVID started and the market dumped, but then right after dumping, it started moving all the way up. And it was moving up all the way until December of 2021, where we started seeing some more bearish pressure. So why was the market moving so tremendously upwards in these recent 2 years, 3 years, or whatever? Well, it's very simple. There was a lot of money being printed to stimulate economic growth because productivity has fallen. As I said, factories not working, people not putting their productivity to labor, and a lot of these other economic factors caused the economy to basically start shriveling down. And what they needed to do is print money, stimulate consumption, because consumption, as you can see from the aggregate demand equation, is directly there to influence and impact economic growth, the growth of GDP, growth of how much money you make in your economy. You know what I mean? So aggregate demand, consumption is a very important part, and they needed to pump money in the economy to keep people consuming and not, saving a lot because they're scared of COVID or of, anything else. So basically what happened now is we've reached the top, and we reached such high levels of inflation that countries need to start battling that as well. And to battle inflation, you're not using QE anymore, but you're using QT, which is quantitative tightening. Now that's a sort of negative monetary policy where they start printing less and less money and pumping it into the economy, which essentially means that less money can go into the market, less money can be used by Wall Street bets, degenerates, and put into the market, and so much. By the way, this is the US 500, the index of the top 500 companies in the US, if that makes it a little bit clearer for you, but you can always check on the top left corner to find out more about that. Now, what's going to happen soon? Well, basically the market's going to keep dropping at this point for the SPX and also for Bitcoin. I personally see somewhere around the 18K level a good bottom for Bitcoin at this point, because in about 3, 4, 5, 6 months, a year, or we can't really predict the time, but we know what's going to happen. In some time, quantitative tightening is going to be so harsh that people are going to start to save a lot more than they're actually spending. So they're scared of wars, they're scared of COVID, they're scared of another recession coming up, and everyone's going to save their money. And what's going to happen? Well, consumption is going to fall again, and aggregate demand is going to fall, which means that economic growth is going to slow down, which means that these guys will have to start, central banks will have to start printing money once again. And what's going to happen when they start printing money? Well, we can expect a huge bull run to emerge from the bottom, just because we're starting to print money again. And here's a piece or fun fact that you guys probably didn't know until now. The largest quantitative easing, or QE, that's ever going to happen is going to happen in the upcoming years, and it's going to be long. It's going to be like 5 years long, 10 years long, 15 years long. The longest one ever to shift energy usage from fossil fuels to sustainable forms of energy. Because everybody is there, all of these big corporations, they're all there for the short-term quick profits, which are achievable by using fossil fuels and very fast, very perishable forms of energy, and stuff that cannot be reused, and stuff that also coincidentally destroys the planet for short-term profits. But there is a small handful of corporations that are trying to more sustainably evolve their profits over time, so that they're able to make less profits but still sustain into the future, but then in the future win a lot more. And to sustain that and make it on a more global level, so a lot of corporations want to do that, well, they're gonna have to print a lot of money to subsidize all of these companies to start using clean energy, because if we don't start using clean energy, it's not gonna be a good world for anyone. And crypto is gonna be the last of your worries at those points. So I hope I made a good point. And lastly, what I wanted to say is just dollar cost average if you want to be looking at the market in this way. DCA, if it comes to the 22K mark, buy a little bit. If it comes to the 20K level, buy a little bit more. And if it dips down to the 15K level in a huge wick, buy a lot more of not only Bitcoin but crypto in general, or whatever your preferences are, and just wait for the long term. So that's it for today's video. I hope you guys enjoyed this little market recap. Make sure to check out margex, leave a like, subscribe if you enjoyed it, and comment down below with your favorite thoughts or questions for me. I'll be glad to answer you all on your own liability, and you should do your own due diligence. So thanks for watching, and I will see you all in the next one.